Hello, traders. Welcome to another analysis and recap for the March 13 weekly outlook. Apologize for the absence for these few days. I've been quite busy. Market was relatively quiet because of the basically the big events is coming up today, tomorrow, and Friday. So Monday was another usual Monday, and Tuesday we had a lot of volatility in the oil market. So basically, let's get into it. Let's just do a quick recap, and I'm going to pull up some of my resources here. So last week, basically, March 6th to March 12th, of course, the big catalyst was NFP number because that was the last sign for today's FOMC meeting coming up in the New York session afternoon. And because the number was relatively positive, so right now, the tomorrow's March hike is the very high possibility right now. It's pretty much it priced in. Now, we don't know what's gonna happen. Normally, I would say you could have those kind of buy the rumor and sell the fact. But it really depends on your time frame, because if you're trading intraday trade, then definitely you want to avoid getting at a high. But if you're a swing trader, you want to look at in a more midterm perspective. So even though you might have the US dollar sell off right after the initial spike, but that doesn't mean US dollar will tank. It actually means US dollar will be sold off until it finds a support, intraday support. Then you have another deep buyers coming in to push the US dollar up, because in a fundamental point of view, everything's looking very well for US dollar right now. You do have, sentimentally, central banks is really hawkish. Fundamentally, the numbers are very solid. And right now, you even have the new budget plan from White House, which could heat up the economy further. Now, the biggest worry is the debt, because they are going to basically raise more money for the military, and they are going to spend more money if they abolish the Obamacare. So things like that will be important to take a look. The White House saying that they are going to balance the budget means they're gonna cut somewhere else, but all this is just political talk until we see the real budget plan. So that was the NFP number from last Friday, which leads to tomorrow, which is today. Right now it's already 2:30 a.m. We are half hour into the London session open, so that is the biggest event will start from today. And oil, if you kept an eye on it, dropped significantly, and the not really a surprise, because the crude oil production had been built up consecutively for 8 weeks. So that was the biggest worry, and then OPEC finally had it. So previous saying that OPEC is really in a battlefield with the shale producers, and they were keep saying that there's no free lunch, means that they don't want to cut the production only to benefit the shale producers. And right now, they're pretty much not going to be that resilient in terms of the output curve. They still are following through their agreement, but the reason it dropped because of the crude oil production build up, but also yesterday we had a news saying that Saudi Arabia actually had a higher production for February. So still, they were saying that those production are for domestic use only, but not really a good sign. And eventually, you really have to know the whole reason oil dropped in the first place was because oversupply and less demand. So the global demand has to pick up. That's a more long-term effect for the oil market. So if you don't have the demand, then the artificial supply curve can only do so much before people have enough. Especially, as I keep mentioning, OPEC members are members, so they're very, very easy to cheat. And the shale producer also are not going to cooperate with OPEC. But that's something you have to keep in mind. Now, how do we know if the oil picks up? It really depends on the economy of China, emerging market, and we will see how the so-called infrastructure plan of US play out. So really, it's more a global point of view. If you see all the global players, Europe, US, Japan, China, Australia, if you all see this major country doing well economically speaking, then of course oil is going to be high demanded. But if it's not the case, then since we have the low inflation market, low demand market in the past few years, so that's what happened basically. Last week also have the RBA, they kept the rate unchanged. Also, the ECB came out with a less dovish statement, and this was not a surprise also because of the headline inflation had hit 2% target. However, it doesn't mean they're going to stop QE, but they did actually talk about stopping the raising the interest rate after the QE finished in December this year. So that was what happened last week. And this week, start from today, is going to be very excited. First of all, you have the FOMC meeting in the afternoon of New York, and then today is also the Dutch election. And Dutch election, just to give you a quick recap, it's not going to be like a Brexit. It's not going to be a Dutch exit. The reason is because no matter which party wins, the party is not large enough to hold the whole parliament. So any party has to cooperate with another party. Now, because of that, it's less likely to have a Dutch exit. However, the situation is a very interesting one because Dutch doesn't really have any issues in terms of terrorist or immigration. So the quite peaceful country, very open society, and the economy was actually doing quite well. Regardless of all this, they still have this populist movement coming out. So that's why it was not a good sign for the Eurozone, because such peaceful country still has this kind of voice that they want to leave Eurozone. That's going to send a very negative message for the Eurozone. So if the candidate of pro-nationalist wins the elections, that's going to set a stage for France and Germany. And that's, of course, going to be very negative for Euro. On the other hand, if the candidate does not win, then it's going to give Euro a short-term boost. But the future catalyst is still in large, which is from the French election in April and May. So my personal bias is looking to the downside, of course, because right now the poll is favor for the other candidate. So if the pro-nationalist candidate wins, that's going to be an upset, and that's going to really tank Euro. On the other hand, if he does not win, it's not really a surprise because the poll is not in favor for him to win. So that's why my bias is to the downside for today. Now, FOMC, you can trade it, but right now a lot of, again, intraday US dollar has been priced in. We will see how the price action turns out prior to the 2:30 p.m. event, Eastern Standard Time. But other than that, in long-term perspective, March hike, even if it does not happen, that means June will happen. June will have more possibility to happen. So really looking to have 2 to 3 or even 4 hikes for US dollar in 2017. And as I kept mentioning, all through the past months, it is that US is the only country has the possibility to hike in this year. So aside from Australia, they have a talk about that, but US is really, and because of that, fundamentally, it's a very strong currency. So that's pretty much what happened last week all through right now. Bank of Japan will also have monetary policy this week. Bank of England also have monetary policy this week. Speaking of UK, the Article 50 is about to trigger this, soonest will be this week actually, because right now the whole upper and lower parliament had given a go. So right now the Prime Minister May has the power to trigger it, and she was saying that she's going to trigger it yesterday. That did not happen, but right now it can be any moment. So right now basically she has the power to trigger it, and again, it's not really anything factual, but it's going to bring up another panic movement, because once it triggers, then it's a done deal, right? It's really a leave for UK, and that's going to cause, I think, another panic movement. And you can already see that British pound had dropped significantly because of that, leading to this. As I mentioned, this March will be a quite negative month for British pound. Now, Bank of England will be very important this week, because Bank of England basically had either a possibility to either raise interest rate or cut interest rate, and they were open depending on the fundamental data. Now, recently the fundamental data have been pretty negative. We had quite a few negative data coming out, so that's why their policy statement is going to be interesting for this week. Will give us a more clear directions for what's about to happen. So basically, that's what happened from my weekly outlook. Apologize, I wrote this on Sunday, but I forgot to upload on my website. Yeah, either way. So we're going to a chart very soon. But basically, the fundamental view for euro is still the same. But because of the ECB less dovish statement, I think it's become a quite neutral currency right now. So I wouldn't necessarily sell it, especially against other currency. The only thing I'll sell euro against is dollar or Australian, because dollar and Australian for me are the only two currency that I'm interested to buy in a swing trade perspective. So euro, basically we move it become from a very negative currency to a neutral currency right now. Now US dollar, of course, still remain a rising star. Fundamentally, sentimentally are looking very well. For a swing trade perspective, I'm really not worried about this intraday movement, because for me, it's really a meter movement. You're looking to the upside. Now, of course, if you are an intraday trader, watch out for the daily range. Watch out that you don't want to buy at a high. That's the only thing you need to watch out. British pound right now is a sort of a bearish currency for me, but want to wait for the Bank of England statement. But if according to what they said last time, I think the statement could be more dovish because of the recent negative data. So again, that's my guessing ahead of central bank. And again, if you do that, it's really risky, because central bank can always surprise you. It's 50-50%. But if they basically follow through what they had said last time, then it should be a more dovish statement. Canadian dollar, because of the oil weakness, it's really not looking well. Especially looking at dollar CAD, it's really, CAD has been very, very weak. Now, pretty much that's what's gonna happen, because Bank of Canada is basically neutral to bearish stance. Fundamentally, yes, GDP, labor market, inflations are all doing well. But as I mentioned, central bank always take the lead. So once the central bank is dovish, and the external micro market of the oil market also looking to the downside, the most important thing is the NAFTA deal is still up in the air. So we saw the Prime Minister Trudeau, which actually came out, basically gave a talk of confidence that the trade should remain resilient between US and Canada. It's really a big uncertainty for Canada right now. If the NAFTA deal it's going to be abolished right now, but if the renegotiation has gone badly, that will be a very negative economic consequence for Canadian economy. And therefore, it's not a currency. It's a bearish currency for me. Australian dollar, again, the central bank is very hawkish. The last GDP was very good, and right now the commodity price is still going higher. Now, a commodity price, it's up and down movement, of course, but right now, looking at the Chinese data, it's still very solid. So because of that, I still put Australian dollar as a bullish currency. New Zealand dollar, on the other hand, is more of a bearish currency because of the central bank. If you want to compare New Zealand dollar, of course, it's still doing relatively well compared to other negative currency, but it's still in a negative territory. Japanese yen, Swiss franc, basically the same position, fundamentally still very weak. Still gonna keep the QE program. No sign of recovery in their inflation, and no sign of stopping for the QE or QQE. But both are going to be benefit largely because of safe haven effect. And unfortunately or fortunately, this month is quite volatile, politically speaking, because tomorrow's election, Brexit, and basically leading all the way to April, France election, May, France election second round. So the first half year, I do think Japanese yen and Swiss franc could be largely both due to the safe haven effect. So just have to be careful, keep an eye on political situation right now. So the central bank position right now is still the same for hawkish one. Still, Federal Reserve Bank of Australia, still very hawkish. Neutral one, I put ECB on here right now, and the dovish one is still Bank of Canada, RBNZ, SMB, and Bank of Japan. Central bank interest rate is still the same. We got a New Zealand, Aussie dollar, and all this same. 10-year bond yield also the same. Notable thing is that US yield and pretty much all the yield is going up right now. That means it's a quite risk on sentiment at the moment, but it can change any minute. So that was a weekly outlook for Monday, and since that, economically we don't really have much new data. Let me pull out Forex Factory right now. Oh, sorry, this is. So Sunday, data saving for North American residents. ECB, Draghi speaks. All this was nothing notable aside from China Monday. Like I say, it's quite positive data for fixed asset investment. Retail sale is still down. It was down last time from the lunar years, so still down. Nothing surprise. And Tuesday, which is today, don't really have any tier 1 data. PPI again better than expected, lower than the previous one, but better than expected. Core PPI also better than expected. So nothing really surprised for US data right now. It's just looking very well. Current account for New Zealand is pretty much in line, a little bit negative. And Wednesday, today, don't really have anything until 5:30. You have the climate change unemployment rate. Now, this is tradable to the downside for me. Personally, I'm looking to short British pound, but that only if British pound is still in an attractive range. Because what happens is that pound has been sold off because of the triggering of Article 50. So, you again don't want to sell at the low or buy at the high. Now, 8:30, you do have the US data, but how much effect is this gonna play? I doubt it, because afternoon you have the FOMC. So this usually it's a good event to trade, but this time might not have much effect for intraday traders. So you can, use your own judgment. That's this I'll say, depend on where the price action is. But just understand that the real events coming out in the afternoon, and especially the press conference is where the most important message come out from Yellen. And the GDP from New Zealand, expecting a negative number. So you could try. I personally, again, don't like to go against the fundamentals. So most likely looking to trade in a sell side. And Australian employment change, unemployment rate, looking to buy. Other than that, it's the Dutch election. It's written here, but it's gonna come out. Keep an eye on that. And then all through Thursday, you will have Bank of Japan, SMB, and the Bank of England. So you see, this really 48 hours will be a jam-packed, non-stop. And then Friday, we will start winding out, and then that will be basically the main event for this week will be today and tomorrow. So for Dutch election, actually, you can go to Forex Live. They will have a lot of updates here awaiting FOMC, and they might have basically, if you don't have any premium services, things like that, then this is a great free website. They have a lot of updates. And again, how do you trade it? If the pro-nationalist candidate wins, it's gonna be upset for euro. You can sell euro. If the other candidate wins, it's gonna be quite bullish for euro. Again, it's all just an intraday movement, because nothing will change for the euro. Basically, it's not gonna be a big deal. It's just a sentiment. So just keep that in mind. Okay, so let's take a look at our 28 currency pairs. Just give me 1 second. All right. So let's take a look at my dollar trade right now. Dollar Swiss, I'm still in this one. Really, as you can tell, we are trading between these two white line here. I have few moving average up here. As you can tell, it's 50, 20, 25, 50, 100, and 200. Basically, still a lot of support looking to the downside. You have lots of moving average below. You have the white line is a weekly support. But basically, as I mentioned, from the intraday, from the swing trade perspective, I'm really only looking to the upside for US dollar. So even if tomorrow you have this kind of sell out because of the sell the fact by the rumor, I don't really care, because unless the fundamental side change, US dollar is still looking to the upside. Another one I have is dollar yen. Also, we are stuck in here, and I not surprised if we maybe touch 113.75 tomorrow, but I'm really looking for it to touch the previous high at 118. That's where I might be interested to take some profit. Otherwise, this is more the swing midterm perspective. Euro dollar is another one. Now, I almost got stop out actually, because I got in at 0.550. Not a good entry, to be honest with you. It's not a good. There's no support and resistance back then, And now yesterday we had this candle which reject 1.07, which happened to be, a 100-day moving average, and you have a resistance zone here. So I actually put a pending order at 1.07, and stop loss was above 1.0850. So I was hoping we retouch 1.07 again. Did that happen? We just dropped directly. So my pending order is still in check. If you are not in, you want to sell at 1.07. This is not actually a pretty good area to sell, providing if you have a stop loss way above here, and that could be a good area to enter. Another one I have is Euro Aussie. Again, you have this big shadow, bearish big shadow at a critical 1.4150, and critical support 1.42 is the 100-day moving average. I also put at 1.4550. Again, did not get filled, and the reason I did not sell right away is because I just think these 2 days is going to be quite volatile. So I don't want to get in at basically, if I sell here, I'll be sell at the support. So I'd rather get in at 1.4150 and with a higher stop loss. So for me, especially I'm already in $1 short. And euro, as I mentioned, become a more like a neutral currency right now. Still, you can still sell against Australian dollar because Australian dollar is very strong. But because of that, I rather miss the trade than enter at a bad level, basically, for the swing trade perspective. That's basically cable is another one I have. Now you see we have a nice large movement. I haven't read the newest update, apologize from that, so I don't know what happened previous in Asian session, but yesterday there was we touched basically the new low for the previous January 18. We haven't been able to reach this new low, which yesterday we touched at 1.2109. So nothing has changed from my swing perspective. I'm still looking to hold until I profit at 1.20 or even lower. It's a break-even trade already, not looking to do anything about it. Intraday perspective, you could look into short cable. Let me take a look. But again, keep an eye on the news, see what happened. Right now you have this sudden movement up, which I don't even know why. You gotta check the news. But for anything in cable, I'm only looking to short if there's a worthwhile reason to do intraday. So let's go back to to swing trade. I don't wanna confuse people. So cable is another one I'm in, and Aussie yen is also the one I'm in at 86 long right now. I'm really looking to hit at least 88 or 87.50. I will move to break even. 88 maybe consider to take some profit off. Otherwise, I'm happy to hold this trade. Aussie Swiss is another one I'm in at 76.50. Pretty much had a nasty drawdown previously, but now we are recovered here. So that's really all the trade I have right now. Let's go over the 28 pair. So Euro pound, you had this movement is not surprised because it's a double top basically at 88. 0.88 is very important and resistant area. So not necessarily something I will sell, especially the Bank of England meeting is coming up. Euro Swiss, again, also not something I'll sell. Right now, it's just swing trade. If I go with fundamentally, the only thing I'm looking to sell is Euro dollar and Euro Aussie in terms of Euro. And Euro CAD. A lot of people, it's very tempting wanting to sell at a high level, and I certainly had that kind of notion before. Let me delete this line. But you just have to know there's nothing wrong to sell technically, but you have to follow through with that. So since I'm a fundamental trader in terms of the swing perspective, I only want to enter when I have a strong enough fundamental reason. So Euro CAD, the oil market is not looking well right now, so I don't want to buy Canadian dollar basically. Euro New Zealand previously, again, we are at quite attractive zone, but New Zealand dollar or RBNZ is actually more dovish than ECB, so not something I'm looking to do. Euro Yen, again, not something I'm looking to do anything about it. You could buy it only if you at attractive level, then you could consider to buy Euro Yen. Right now, I don't have anything. Maybe if we come down to 121 and you have it. But again, Euro, because of the future election in France, Germany, it's just not something I particularly want to buy in the swing trade perspective. Now, Pound Swiss, if you're looking at all the British pound trade, you have a sort of recovery just for now, right? It's not a big deal. British pound is still looking to the downside. The blue line is, some resistance support line I like to draw in an intraday perspective. I don't really draw all the pairs, really the one I trade. So again, we are really in this range area for Pound CAD. Pound New Zealand, same thing, nothing much going on. And Pound Yen, also nothing much going on. Swiss franc, Japanese yen, not something I trade. Dollar Swiss, we just saw it already. So dollar CAD, look at that, huge upside movement. The previous high recently, it's again 1.36 will be a critical area. Looks like we are having a flag or a triangle here. I'm still looking to upside, to be honest with you, but I'm not looking to buy it just because we're too close to a critical resistance. But if you ask me general direction, yes, dollar CAD is looking to the upside. The whole thing about the oil market is just very interesting. So just be careful if you're trading oil. It's always very volatile. Aussie Swiss, I already talked about that. Aussie dollar is interesting because they both are strong. But if you ask me, have to pick one, of course, I do think US dollar is stronger than Australian dollar for now. But it can change any moment because Australian dollar is still very, very bullish, especially in 2017. So not something I like to do in the swing trade perspective. Aussie dollar, what I generally do is if I want to trade a risk event and maybe I trade a US data, and if the data is negative, then I want to sell US dollar. Then the only currency that has a strong enough reason to go against US dollar is the Australian dollar right now. So that will be the case. I want to buy Aussie dollar. Aussie New Zealand continue to shoot up, and Aussie yen is the one we're in. Again, CAD Swiss, CAD yen, we are all at very nice support area, but it just not something I don't want to buy Canadian right now just because the oil market is just too volatile, too bearish fundamentally. New Zealand Swiss, New Zealand dollar, New Zealand CAD, New Zealand, everything is at a critical support. For New Zealand, again, because of the central bank, it's not, for New Zealand, it's just on the watch list. As soon as we can have some neutral stance from the central bank of New Zealand, then you can go ahead and buy New Zealand dollar. But unless that happens, I'd like to stay out, because the central bank is very obviously wanting to weaken their currency. So since that's their agenda, I don't want to go against central bank. So that's why I tend to stay out of it. So that's pretty much what happened right now. Now, that's all my swing trade. Intraday trade, I did took a trade last Friday. Took a euro dollar trade last Friday, I think, at here. And reason is because right after the ECB meeting, Friday, there was a leak information saying that they talk about raising the interest rate, and that was not discussed in a press conference. So basically, that was a positive news. I bought it, just short-term intraday trading for Friday. Let's see what else I took on last Friday. Right now, really anything I trade more in an intraday perspective, and all my swing trade is still just the same. I also took CAD from last Friday. We also have a very positive data, I think. So NFP was not tradable for me, but the employment trade unemployment rate from Canada was very positive. So I took few Canadian dollar trade from intraday perspective. Again, I don't want to hold CAD, and that was the right decision because oil market tanked. So again, if I trade a currency without fundamental strength, I would just wrap it up, intraday. So I don't want to hold it. So the last one, the NFP, the CAD employment data was positive deviation. I sold New Zealand CAD and bought